Today, we got big words for you. Equity, stocks, balance, bonds, money market, and ETF. Don't worry guys, no need to get overwhelmed because today, I got you covered. Hey guys, what is up? Welcome back to our channel. To those who still don't know me, my name is Ingrid Cruz and I'm from Family. I'm so excited because in this video, I am going to help you determine what type of mutual fund is suitable to you or mutual funds that are right for you. Before we get started, go ahead, hit that like and subscribe button. Our channel is about money and investments. Now, here in the Philippines, we have 4 types of mutual funds. But before you tune into this video, please make sure that you have already watched our video about mutual funds here because this video will help you understand the concept of mutual fund. Okay? So, now without further ado, let's get into it. Uunahin ko yung tingin kong pinaka-suitable sa millennials, which is stock or equity fund. Para hindi kayo malito, the word stock, equity, and shares can be used interchangeably. Okay? So the stock market can be intimidating, but a little information can help ease your fears. I will tell you what a stock is first. So a stock is a piece of ownership of a company. So once you own a single share, that officially makes you a part owner of that company. So now you are called a stockholder or a shareholder. So when you invest or buy stocks from, let's say, Metrobank, that simply means that you are giving or putting capital to the company. And now you are entitled to a small fraction of their assets and earnings. Okay? So I hope that helps. Now, what is the difference between investing in equity mutual funds versus directly investing in the stock market? Both mutual funds and stocks have their own benefits. But one thing that differentiates them is that prior to investing directly in the stock market, you may need to research on several reports about the company and market information. But always remember that you have the final decision. While investing in equity mutual funds, your funds are being managed by fund managers who will make the investment decisions for you based on the objectives of the fund of your choice. So it is more time-consuming when you invest directly in the stock market because you have to continuously monitor your positions daily. So when you invest directly in the stock market, you own the shares of the company. While sa mutual funds, you own the shares of the fund. Gets? Also, mutual funds provide you a timely updates on the performance of the fund. While in stock investments, usually it requires you to actively manage your portfolio. There are 2 types of equity funds. One is actively managed funds and the other one is passively managed. Unahin natin yung actively managed funds. From the word itself, active, meaning the fund managers are actively buying and selling stocks in order to beat their respective benchmark or achieve the objectives of the fund. Okay? So ano nga bang benchmark? Ang benchmark ng equity funds here is the Philippine Stock Exchange Index or PSCI. So ito yung standard or parang point of reference to evaluate the performance of the fund. Okay? Sa Family, we have 2 actively managed equity funds. Okay? That is the Save and Learn Equity Fund and the First Metro Consumer Fund. Okay, so para ito sa mga investors katulad ko na aggressive and willing to take higher risk. And because I believe that the higher the risk, the higher the return. The difference between the two is that the Save and Learn Equity Fund is invested in selected quality stocks across multiple industries such as banks, properties, and services. Okay? Whereas in the First Metro Consumer Fund, concentrated siya sa companies na part ng consumer industry, which I believe na magandang investment kasi ito yung usual companies na nagpo-provide ng necessities such as grocery. And as we all know, Philippines is a consumer-driven country. That is why we are taking advantage by being invested in these types of stocks. Now, I'm proud to say that both of these funds have been in the top-performing funds in the Philippines despite our situation. Ang galing, diba? Next is the passively managed fund. So, this is just simple because Ito yung type of fund na sumusunod lang sa galaw ng benchmark and generally, mas mababa yung management fee dito. Okay, ito proud ako ulit dahil dalawa yung mutual funds ni Fami under passively managed funds and both of these funds are in the top 1 and top 2 in the ranking. So we have the First Metro Save and Learn Philippine Index Fund and the First Metro Exchange Traded Fund. Both of these funds are the same in nature, except that the First Metro Exchange Traded Fund is a fund that tracks the PSEI and at the same time can be traded like a regular stock in the stock market. So, pwede kayo bumili ng shares ng First Metro Exchange Traded Fund or FMETF and directly in the stock market as well. Fun fact, FMETF is the first and only exchange-traded fund in the Philippines. To learn more about FMETF, we have provided a link in the description box below. So to sum up equity funds, these are great investment vehicles for young investors because investors get to invest with just 5,000 pesos. And the only thing that you need to invest in mutual funds is a little money and little time to open an account. So choose to invest. Now we move on to the next type of fund, which is the balanced fund. So these funds invest in a mix of equities and fixed income securities like bonds. The thing that you have to remember here is that the balanced fund tends to have more risk than a fixed income fund, but less risk than a pure equity fund. So if you are a type of investor that finds bond funds too conservative and equity funds too aggressive, I believe this is the right fund for you. That's why in FAMI, we have what they call the Save and Learn Balance Fund. So these are for moderate investors that are willing to invest for 5 to 7 years. So most of the time, mas malaki talaga yung allocation sa stocks or equities kesa sa bonds. For more conservative type of investors, we have what we call the Fixed Income Fund. So the fund managers here invest in government bonds and corporate bonds. So whatever type of bonds are, either government or corporate, bonds are evidences of indebtedness by a corporation or government to its creditors. So kapag bumili ka ng bond, ibig sabihin nun, nagpautang ka either sa government or to a corporation. So how do you make money through bonds? Of course, nagpautang ka, so you have to expect something in return. That's why we receive interest. So in FAMI, we have two types of fixed income fund. The first one is the Save and Learn Fixed Income Fund, and the other one is the Save and Learn Dollar Bond Fund. So both of these funds are invested in bonds, but the difference lang is that the latter fund is the dollar-denominated fund. And the Save and Learn Dollar Bond Fund, or the SALDA-BUF, are for investors that have excess dollars that want to have a higher return than time deposits. Last but certainly not the least are money market funds. Ito ay para sa pinaka-conservative type of investors. These funds invest in short-term fixed income securities such as government securities, time deposits, and treasury bills. So we have what they call the Save and Learn Money Market Fund. So these are for investors who can place their excess funds for the next 6 months to 1 year. So again, FAMI has two funds under actively managed equity funds. And these are Save and Learn Equity Fund and First Metro Consumer Fund for aggressive type of investors like me who are willing to take higher risk and have a 5 to 10 year time horizon. Again, these funds' goal is to beat the benchmark, whereas in passively managed funds like Save and Learn Philippine Index Fund and First Metro Exchange Traded Fund, the goal here is to track the PSEI or the benchmark here in the Philippines. This is also for aggressive type of investors with a 5 to 10 year time horizon. To those who want to invest in a lesser risk than equity funds, because you're the type of investor who is not that risky, we have the Save and Learn Balance Fund, which is invested in stocks and bonds. These are for moderate investors. Then, the Save and Learn Dollar Bond Fund is for conservative to moderate type of investors with a time horizon of 3 to 5 years. For conservative investors, we have the Save and Learn Fixed Income Fund and the Save and Learn Money Market Fund. These are funds that are invested in fixed income securities. Save and Learn Money Market Fund is for investors with a 1 year or less time horizon. So that's the 4 types of mutual funds in the Philippines, and I hope you learned a thing or two. Getting started with investments can be really scary. However, the moment you invest and do it right, You save a lot of hassle in the long run and for the rest of your life. Your mutual fund choice should depend on why you're investing, but whatever you choose, investing in mutual funds will surely step up your investment game. In our next video, I'm going to teach you how to start your mutual fund journey. Subscribe to this channel to learn how. Please leave any comment if you have any questions. I'd be happy to answer them. Again, thank you for watching and see you guys next week. Bye!